Bank of Uganda has said that it's not yet losing sleep over the promises by World Bank top-cut future funding to Uganda's projects. Last week, the shilling shed 40 units off its value against the US dollar, which the central bank has dismissed as merely speculative by the market.
As a central bank, whatever the fundamentals will lead to the change in the exchange rate, we will ensure that the exchange rate remains stable at whatever level the fundamentals determine it to be. That's what we mean by market exchange rate, determined exchange rate. But right now, whatever we are seeing out there is just a speculative behavior by the market. We have been informed that this aid cut is for projects that are yet to be approved by the World Bank. So it's very likely that a majority of them have not been budgeted for. So we are waiting for that information before we can give a firm answer.
It's, however, true that economic growth, especially towards the end of 2022-2023 financial year, shrunk, with some sectors registering negative growth. The actions from the current monetary policy decisions, including lowering the reserve ratio by 0.5%, is to allow banks to release more money into circulation.
Now, we expect that to add liquidity into the system. And like we mentioned before, that we are seeing that economic growth is slowing down. And we hope that by doing so, we are adding liquidity into the system. And also with the lower CBR, that should have an impact, overall impact, in lowering the lending rates.
Reducing the CRR alone by 50 basis points would mean that you're injecting, looking at the deposit available, the deposits in the commercial banks, we are talking about an injection of around 160 billion.
If you asked an ordinary person on the street, part of the simple indicator that the economy is not doing well is the general size of traffic jam on Kampala's roads. Matching that measure with official numbers actually shows that things are a little bit slower than usual. In case you're wondering why money for the majority might be more scarce than usual. Rachel Nabisubi, NTV Business.